Hey, what is up everyone, and welcome back to another video. Today we're taking a look at Ethereum, which is currently sat at under $1,800, which is absolutely insane to say. But before we jump into it, make sure you guys go check out the Discord down below. You can see on the screen right now just how many trades our members have been winning from simply joining and starting to copy and paste the trades we're sending out to them every single day. Now those trades we take ourselves, and we've had over an 85% win rate over the past few months. So make sure you join up. First link in the description. Super easy to join up and super easy to follow those trades along. Now back to the video. So to quickly recap what has happened this week, well, in March everything started off relatively well post crash. We started heading up on Ethereum. We hit $2,000, hit this resistance level, which is the 0.618 level in the Fibonacci, and we've then continued to drop back down. Now the main interesting thing isn't that Ethereum is necessarily under $1,800, but it's more so to do with the fact that the S&P had its second -5% day 2 consecutive days in a row, which is insane. It's never happened in history before since 2008. So for the first time in 17 years we've had this occurrence, and this right here is considered a market crash. This market crash obviously comes from the Trump tariffs that were enforced last week, or this week as we're really talking. So that's what we're sort of recovering from for the S&P, but crypto didn't actually see that crash. Crypto instead just consolidated, which again, really strange to see, because it usually has extremely good confluence with the S&P. Not this time though. So that already shows that crypto is most likely undervalued, and the crash was already priced in. The only time we don't crash is whenever the market is already undervalued, something is already priced in, and it seems like that is the case. Now we're going to jump into Ethereum's inflows and outflows for the ETF. We're also going to take a look at the heat map in just a second. Regardless of those factors, we should already be looking to accumulate. Everything's down, everything's extremely undervalued at these rates. The tariffs, again, the tariff news won't last forever. It's not like this crash is going to continue forever. The S&P, for example, usually sees a 25 to 35% crash, and then it recovers very well. It recovers by over hundreds of percent. The previous crash from 22 here all the way to the lows was a 30 or 28% crash. The previous crash, which was during the pandemic, was how much? 35%. So that was the worst crash we've seen. We're probably now going to see something similar to what we saw in 22. It was roughly a 25 to 30% crash. Right now we've crashed again. This is on the S&P, so crypto might follow along a bit. So we'd expect the S&P to potentially fall to 4.6 thousand, at least 4.9 thousand, which is going to be another few percent. Again, it's probably going to see a bit of an upward move before another crash or something like that, unless Trump absolutely demolishes more news on us. But regardless, S&P should still head a bit lower. The tariff news has been priced in. I think more countries will either retaliate this week or again sign more deals, which should better the S&P, but we'll see. We will see. Now Ethereum, again, anything under 2k is an extremely good buy for Ethereum. If we're targeting the previous highs, which is at $4,100, that's already a 2x. So right now we're over a 2x because it's at 1.8k. Very good buy. The lowest we could go, probably 1.55 thousand, somewhere around here. Again, that would be another great DCA level. The key thing right now is you want to have multiple dollar cost average in entries with any sort of crypto, whether that's Ethereum, Bitcoin, Polkadot, whatever. That's what we want to have. Now let's quickly take a look at the ETF inflows and outflows before we take a look at the heat map, which has some interesting data as well. So the Ethereum ETF, again, we've had huge amounts of outflows during this crash right here, as I've highlighted. Those outflows don't really show the full picture. When we were getting inflows, the market was pumping. Inflows were absolutely huge. These were multi-10, even $100 million inflows. Outflows, I think, reached a cap of like 30 million maybe, so still extremely high, but not as high as the inflows were. Now this week we had our first ETF inflow, which, or to be honest, it was yesterday that we had this ETF inflow, and you can see if we zoom in ever so slightly right here, little inflows have started to come. We had one major outflow probably on the tariff news, but we got a little inflow yesterday of $2 million. That is absolutely nothing in the grand scheme of things. $2 million is a lot of retail investors dollars in the crypto market, so it's nothing major. You know, once we start getting into tens of millions, that's when it starts to really become slightly bigger, and hundreds of millions is usually the big players. So nothing major on the inflows yet, but it's still a good sign to see a few inflows popping up when we're at extreme undervaluations. If this was purely outflows like we were getting sort of here, then it would be a bit more concerning. But again, you have to remember, these investors, they don't like risk, they don't like any sort of uncertainty in the market. And what those tariffs do is it not only causes uncertainty for a trade war, but it also causes uncertainty on how the US itself is going to manage. Because you have to remember, companies like Apple, for example, who do have manufacturing, you know, in China and other Asian countries who have now been tariffed high, and those countries have retaliated, at least China have. Apple doesn't have yet a manufacturing facility in the US. Sure, they might have gotten a huge multi-billion, maybe even trillion-dollar deal with the US to build one, but those don't get built overnight. So it's going to take a while for not only that to be built, but also for the repercussions of those tariffs to come into place. And that's going to work the same for all other companies, and that causes more uncertainty in the market as to how those companies are actually going to be able to survive. Will they have to raise prices? Their profits will drop, revenues might drop, and it causes uncertainty for a complete market crash, complete inflation, and everything like that. If that was the case, then we'd be getting a lot more outflows. Now we're getting a few inflows. Maybe investors know that we're not going to get that, and they will be resolved, because again, nobody wants that to happen, not even the countries that are placing reciprocal tariffs, not even the US themselves. Now to the liquidation heat map. This shows us how many liquidations there are from positions. All positions above are short positions that have liquidations higher. All, you know, lines below are long positions that have their liquidations obviously lower. So we have roughly $24 million worth of liquidations here on Binance Ethereum 24-hour chart. Those liquidations are at 1.8 something thousand and just over 1830. We're probably going to approach that relatively soon. It's not going to be a huge move, you know, $20 up to $40, $50 up. So yeah, nothing major. Just if you're looking for a short-term trade, look for some longs to these levels. Those are going to get wiped out, and obviously take profits at these levels. Don't go for a swing trade long. That's what we really have for Ethereum. Long-term, buy up spot, stake it up, have another DCA level lower, and just a long I mean by holding for a longer term, because it's going to be at least a 2x, 2.2x from here. Ethereum, in my opinion, is a safe hedge, safe play. Yeah, I don't think you can really go wrong with this trade and really spot position. You know, if we weren't even this low during August when we hit 2.1k, and I remember this was a bit crazy as well, but 1.7, 1.8k, absolutely insane. Going to be DCAing as well. Again, and I've been in Ethereum since, you know, 1.1, 1.2k. I'm up, but I'm still going to DCA more, because you can't really argue with a 2.2 return. You know, the S&P will probably shoot back up 50% and get double that. Yeah, insane. Make sure you do that. And if you did enjoy the video and you did find it helpful, please do make sure to like and subscribe, as it helps out a ton, guys. It really does. And if you want to be copying my trades every single day, then check out the Discord down below. Super easy to join up, super easy to follow along. Make sure you do it. First link in the description. And if you need a place to actually buy, sell, or trade cryptocurrency, then check out all the exchanges we're working with down below. Thank you all for watching. I'll see you all tomorrow. Goodbye, guys.